This trade didn't win because of a perfect entry. It won because I didn't sabotage it, and it completely changed how I read market structure. I've been trading for 2 years. I'm not consistently profitable yet, but I'm building the discipline to get there. And this trade taught me more about patience than almost anything else before it, because the real lesson wasn't the setup. It was waiting for price to prove me right or wrong. We've turned the clock back just to right before New York morning hours, and we're on the 15-minute chart. We can see that we have a swing low and a swing high. We can see on the 15-minute that we're currently bullish in our order flow, and I've broken structure to the upside and created this swing high and are now retracing back down the leg. As price retraces, I'm looking at this final sell to buy candle right here on the 30-minute chart as our area of interest. That's where I expect buyers to defend the strong low and help price move higher. Around 10 a.m., price moves down and mitigates our key point of interest marked up by the green box. Now, this is where it gets interesting because I'll drop down to the 1 minute to see if we can get confirmation buyers are back in control. Here on the 1 minute, we get a strong bullish reaction once price hits the zone. We can even see some displacement right here. While we do close above this supply zone here, barely, the most immediate candle right after that is an immediate push down by sellers. We can see on the initial move down that the sellers' movement down wasn't that strong. Buyers were constantly pushing back, as we can see the exchange of down and up candles. The lack of meaningful displacement tells us that there was no real imbalance, and this was actually fair pricing experienced at this key level. Given the context, this gave me pause and made me feel that maybe this was inducement. Since the mitigation was such a shallow penetration, it gave me the feeling that maybe the market was inducing early buyers. And so I decided to wait. If price rallies from here and I miss it, then that's fine. There's always another trade. But if price runs lower, then that first reaction was likely the inducement I suspected. A few minutes later, sure enough, price sweeps that low. We'll now consider this supply zone, denoted by the green line, as the key level that needs to be overrun by buyers in order to consider taking the long. And this time we get another aggressive move up by buyers, breaking the key level. You'll notice that we close far above the green line and even have another minute of bullish activity before price starts to inevitably retrace, hopefully into our entry. It's at this point that we want to go to the 5 minute to see if we can find a perfect entry to catch this move down before the actual move up. Here on the 5 minute, I place my entry at the top of this fair value gap I see. Stops go below the low, and I'll target this fair value gap on the 5 minute as my final take profit for a nice 4.48 bar trade. Price barely tags us in, moves up, and then starts to come back down to our entry zone. Here on the 15-minute, you can see that prices have mitigated our entry zone, but quickly see rejection back to the upside. We want to hold steady here and not move our stops since our original thesis hasn't been broken. By the end of New York session, we've been ranging in profit, but no clear move to the upside yet. Since we're heading into after hours and I might not be able to monitor the charts as effectively, I would move my stops to the bottom of this wick here where we saw the clear rejection, taking a significant amount of risk off the table, but allowing price to move without stopping me out. And looking back, I think this is where most traders lose. When you're awake, you second guess. You close early, you interfere, or you self-sabotage. And I'm guilty of this too. But I couldn't in this situation because I was asleep. And so price just played out. During Asia session, we finally see the move up and almost hit our take profit before we see a heavy retracement down. I know that if I was awake and watching the charts, I definitely would have closed early. But since I was asleep, price ultimately rallies back up during London session and hits my take profit and proves that we're in a clean continuation phase. This trade respected market structure. Bias first, point of interest second, confirmation third, and execution last. But more than that, it rewarded patience. If price had just taken off after that initial mitigation to my point of interest, I would have missed it. And I would have been okay because I was trading probabilities, not emotions. That shift is everything. If you want to see more backtesting breakdowns like this, where I walk through my thoughts and show how I would manage trades without interfering, watch this next video right here, and I'll see you there.